Pre-qualification versus pre-approval. What is the real difference? First, it's important to know the answer to the question will depend on the lender you're talking to. Believe it or not, it's not black and white. In fact, if you talk to 100 different lenders, you're probably going to get 100 different answers. That's because lenders define these things differently. So it's important to know what they mean when they say pre-qualification versus a pre-approval. The truth is, it really doesn't matter what they call it. What matters is the action that is taking place to ensure you are pre-approved before you go out and start shopping. Typically, when a lender says that a client is pre-qualified, essentially here's what happened. The client has completed a loan application that's probably online, it could have been over the phone. The lender has pulled their credit, and the borrower has provided income and asset documentation along with anything else that the lender has asked for. Now, with that information, the lender is generally going to run that loan through the automated underwriting system. And that system is going to say the loan is approved or not. But please understand that's still just what we would consider a pre-qualification, because that loan has yet to go to an actual human underwriter, which in the lending industry is the person that actually makes the final loan decision. Now here, what we do is a little bit different. We're actually going to turn this whole mortgage lending industry around and start to do this underwriting pre-approval up front before you're out in the car, out shopping for houses. So here's what that looks like, and that's the difference from a pre-qualification to a true pre-approval. In a true pre-approval, all of that same documentation has been submitted to the underwriter, the human being underwriter. They have reviewed the loan guidelines, they have reviewed the client's details, income, assets, all that fun stuff. Everything is calculated, and that loan is given a stamp of approval. Now, there's still things that are going to be subject to, such as you have to find a property, the appraisal, the preliminary title report. There's some other things that have to happen, but the two big parts of the process that hang people up in the lending cycle is income calculation as well as assets. So if we can remove that up front, out of the way, and actually have an underwriter look at the loan file prior to you getting in a car and going out and shop, that's a game changer. It brings confidence to the process. It helps you negotiate with the seller and the listing agent, because now if you're in a multiple offer scenario, and let's say there's 5 other buyers on that house, very, very few of them have actually had their loan pre-approved, meaning that the actual human underwriter has approved the loan. Not pre-qualified, not pre-approved, just through the automated underwriting system. And this is where it starts to get confusing, because lenders call these things all different types of words. But the bottom line is, when you hear the word pre-approval, you want to ask, does that mean an underwriter, the actual human underwriter, has reviewed the file? This is why it's so important to work with an experienced lending team that understands red flags. For the most part, the lending guidelines are all the same, and what's required is typically all the same, no matter the lender or lending team that you're working on. But really where it starts to differentiate is getting into the details, understanding the story, knowing those lending guidelines so well that the loan officer, together with their support staff, the processing team, the underwriting team, they're in it, they're in the meat of it, and they start to really be able to understand how to navigate those guidelines. These are very, very, very complex guidelines. I mean, just, a ton of different words, approaches, if this, then that. And so really being able to work with a lending team that has experience and has the skill set to be able to think through and evaluate those guidelines, it is so, so important. And it could be the difference of your loan being approved or not. There is so many times that I get the call from a real estate agent or a client, and they're getting ready to close on a house with another lender, and that loan was declined 3 days, 4 days, 5 days before the actual close of escrow. That's what we want to control. That's what we want to stop. I hope this helps to clear up any confusion. If you like this video, give it a thumbs up. And if you could just take a moment and subscribe to this channel, this would be so helpful to us as we're trying to build an education platform that's useful. Until next time.